Good evening, friends. Welcome to the next virtual coaching session on GST, Paper 8, Indirect Taxation. Sorry for the delay. We are 5 minutes beyond the schedule. Nevertheless, I'll try to do justification for that time which you have spent. Please confirm if you are able to see my Excel file and you are able to hear me properly. Please confirm me on the chat window. Are you able to hear me and you are able to see my Excel file? Once you confirm, we will start our discussion. Once you confirm, we will start our discussion. Let me increase the size of my Excel file so that you can view the Excel file. Yeah. Okay. If you can confirm I'm audible and you can see my Excel file, it will be great, ma. Okay. Thanks for confirming, Ambika. Yes. Okay. Raman, good evening. Yes. Thanks for confirmation. Both Ambika and Raman. Today's topic, we have imports and exports under GST, read with your refund under GST law. Technical issues, GST annual returns due date, everyone is busy with that. So the presentation for today's session, I will be sharing you by tomorrow. So today we will manage with our Excel file for our discussion on this topic, import and exports under GST and also refund under GST. So what we will do today, we will start with our topic called refund under GST law. So we'll have our discussion on refund under GST law. Examination, what can you expect from this particular topic, refund under GST law? You can expect a theory for 4 marks and you can expect a problem for 6 marks, right? So examination point of view, what I have to focus on this particular topic, a theory question for 4 marks, a problem for 6 marks. Now, this is from your examination point of view. So what I have to learn from my career point of view. Students, I would say this topic called refund under GST law, this is more helpful once you get into practice, once you get into corporate world. Practically, in a practice, this is more relevant for below aspects. One, working capital issue. 2, erroneous payment of tax. Right? 3, tax paid without authority of law. Then 4th case, your excess payment due to clerical issues. Right? Now, these are the areas as a future chartered accountant, you are going to have these issues exposed in front of you once you get into the corporate world. So please keep in mind, my area of practice, my interest in this area called refund is quite vast in nature. I'll give you a couple of examples for us to understand where all we'll apply these this particular concept called refund under GST law. I'll give a couple of examples. First one, remittance of tax under IGST instead of CGST and SGST. Now, this aspect comes under our classification, your interstate supply, intrastate supply, right? Determination of place of supply. So by erroneous interpretation, I have presumed that it is an interstate supply instead of intrastate supply, or vice versa. Second aspect, payment of tax on RCM not required to pay. Now, this comes from your levy point of view. I'll give you an example for you to understand on this element. There is a concept called payment of GST on ocean freight. Payment of GST on ocean freight. So what is ocean freight? When I import goods into India, there is a provision under IGST law, section 5, where they have notified under section 5, like similar to your CGST Act, Central GST, section 9, subsection 3. I repeat, section 9, subsection 3. 9.3 talks about your notified goods, notified services. Similarly, under IGST, I have something called section 5, subsection 3, which talks about my notified list of goods, notified list of services. So this is one aspect called ocean freight. I'll come in detail with that respect to that example. Third example, accountant has remitted rupees 1 lakh instead of rupees 10,000. Now, this is your excess payment of tax. Now, how it happened? While raising an invoice or while keying in data, I have to copy paste from my Excel file. The accountant, while looking into zeros, 1, 2, 3, 4, he has to type in 4 zeros. Erroneously, he has entered 5 times. The moment I have entered 5 times, my tax liability, like a tax amount I have to enter as 10,000. I have entered as 1 lakh. Now, I didn't even notice that erroneously I have entered 1 lakh. I have filed my GST at 3B. I have paid my tax. Now, this is a scenario called excess payment of tax. Next. I have accumulated input tax credit. Why? There is a reason. First aspect, I have a zero rated supply. Okay. Next, I have something called inverted duty structure. Now, this is little technical. My input tax credit is being accumulated in my balance sheet. Now, this is the area where you, as a practicing chartered accountant, your acumen, your talent lies to convince the authority to understand the GST provisions and then get a refund of tax from the government authorities. So this is a concept where I make a zero rated supply. When I say zero rated supply, this is covered under my section 16 of IGST Act. We will discuss this in a later. I'll come to this section 16 of IGST Act in a later. Right? Now, these are a couple of examples for us to understand. When, how I can file a refund application, or I can see a scope for me as a practicing chartered accountant to get a refund from the GST authorities. I'll discuss these aspects in detail so that you will have this understanding of what do you mean by refund, how does this refund mechanism work, who can file a refund application, when can my refund application be processed. These aspects we will have a clarity, right? This is what we need to understand. Now, first aspect I'm talking about remittance of tax under IGST instead of CGST and SGST. First scenario, I as a registered person have paid tax as IGST instead of paying CGST and SGST. I'll give you an example. Say I'm a I'm a landlord. I'm registered in, say, Bihar. I have a property which is given for rent. This is a commercial property, right? This property is in, say, Patna. Now, I have my tenant. This tenant says, sir, I have a branch in Bihar. This tenant says, sir, I have my head office in Delhi and I have my branch in Bihar. Now, this tenant approaches this landlord. This tenant says, sir, we want to take your land on a rental basis. For what? We are planning to commence our business. But no registration obtained in Bihar. Now, look at the analysis of the tenant. Look at the theory brought in by the tenant. Now, I'll put, like, when I have to register my section 22 read with section 24, it says there is a registration required when there is a supply of goods or services taxable, or when I'm a person who has to pay tax under RCM, or I'm a registered person in a state, I would like to cause the movement of goods for the purpose of business or store the goods at a place other than registered place of business. Now, this gentleman who happens to be a tenant, but this tenant says, sir, I'm registered in Delhi. I have my business activity happening in Delhi. I need a branch in Bihar. I'm not sure whether or not I'm going to start my business activity in Bihar. I'm not sure whether or not I'm going to commence my business activity in Bihar. So I need a place of business. I need a particular place. Now, as of now, I don't have an intention to make a supply of goods from where Bihar. I don't receive any inward supply in Bihar other than rental activity. Now, if you see your notified list under section 9.3, section 9.4, 5.3, 5.4. I repeat, section 9, subsection 3 under CGST law. Please make a note. My section 9, subsection 3 read with section 5, subsection 3. 9 under CGST law, section 5 under IGST law, right? So if I read my provisions of section 9 read with provisions of section 5, I have to receive a notified list of inward supply on which I am supposed to pay tax. This tenant says, I don't receive any of notified list under 9.3 or 9.5, 9.3 or 5.3 for the purpose of payment of tax. So, point number 1, no supply, no need to register. Point number 2, no inward supply. Again, I would say no, not to register. Point number 3, storage of the goods at a place other than registered place of business. This tenant says, sir, I'm not going to store anything. I need one place, but I'm not going to do anything as of now. Chalo. Now, a question to you who are listening to me. Assuming this tenant, I'll put the name of tenant as Mrs. XYZ Limited. And the landlord, I'll name this landlord as ABC Limited. Now, students, a question to you. The XYZ Limited registered in Delhi. branch, this XYZ Limited has opened a branch in Bihar. Question to you, should XYZ Limited register themselves in the state of Bihar? My question to you, having a registration in Delhi, is it mandatory for XYZ Limited to get registered in the state of Bihar? What would be your answer? If you say yes, justify. If you say no, justify. Let me see your answers, then we will go for further discussion. Let me see your answers, then we'll go for further discussion. Sunil says, yes, I have to register. Okay. Ranjit says, not required, only Delhi is required. Okay. Okay. Specify the reason, Sunil, why it is required. Ranjit says, yes, it is required. Let me see. Any other answers? Give a justification. Why I have to register or why I should not register. Give a justification. Let me see a couple of other answers. Anjali says, it is mandatory, but he can obtain temporary registration for ITC. Sir, it is not mandatory. I agree with you, Anjali. But he can take a temporary registration for ITC. I do agree with you. Okay. Raman, Ambika, others, what would be your answer? Okay. So now I'll put it this way. When we talked about registration, we had this section 22, we had this section 24. Students, please make a note in your working note. It is easy for you to recap. And when you're reading the law, when you're reading this subject, I do admit that you may not have exposed to the area of indirect taxation. However, when you're reading this topic, it is good to assemble your various topics to come into a practical scenario, how we interlink the various topics to come into a conclusion. Now here I draw your attention to section 22. Section 22 says, wherever you are registered and you have a threshold limit, when you make a supply of goods or services, supply of taxable goods or services, then you are supposed to get registered when your threshold limit exceeds the specified limit. Now, this entity called XYZ Limited have registered in the state of Delhi. Now, when I come into the state of Bihar, the first question comes to me here, should I need to register? Now, I'm saying that I don't have any supply. In Bihar. I have only an office in Bihar. Why? I'm trying to explore. I'm trying to make an adventure. I'm trying to make a exploration whether or not this place is suitable for me to commence my business. Now, since there is no supply, as one of our friends said, Anjali, it is not compulsory for us to register in the state of Bihar. Now, section 24, again, if you go through section 24, it says any of those notified 11 categories, I have to get registered. I don't fall into any of those 24 categories. So point here will be, if at all, if there is a supply which is going to take place, then I have to get registered in the state of Bihar. As of now, I need not register. Now, when there is a contract, between ABC Limited, this ABC Limited has got into a contract with this tenant called XYZ Limited. Now, XYZ Limited has represented to this ABC Limited saying that, look, I'll pay you monthly a sum of rupees 1 lakh. You raise a bill for the rental, you bill it on my head office, which is there in Delhi. Now, this gentleman, ABC Limited, this ABC Limited have considered like this way. Supplier and recipient, place of supply. Supplier is in Bihar. Place of supply they presume to be Delhi. So why they are presumed to be Delhi? This ABC Limited have erroneously, they have not gone through the provisions under your IGST Act for determining your place of supply. When we refer to our provisions under IGST Act, where I determine my place of supply, I have to look into this provision under section 12. When I read my section 12, which determines my place of supply, there is one provision which says anything which is done in relation to a immovable property by virtue of section 12, the place of supply happens to be the place where my immovable property is located. Now, as per section 12(3), my place of supply happens to be Bihar. But what happened? Erroneously, this particular ABC Limited have paid a tax called SGST, CGST. Right? Now, on this monthly rental of 1 lakh, 18%, 18,000. Instead of paying 18,000 SGST, CGST, SGST, erroneously they have paid IGST. I have to pay SGST, CGST. SGST Bihar, CGST Bihar, 9,000. But this landlord was under a wrong interpretation. Because my recipient is in Delhi, I have to charge IGST. Now, when you come into this particular thing, you have examined that my place of supply provisions in relation to immovable property shall be the place where that immovable property is located. So by virtue of this, since there is an erroneous payment of tax, now question comes here. So can I claim a refund and pay the proper tax? Next question comes, should I need to pay interest? So first question comes here, as a prudent accountant, can I claim a refund? And when I claim a refund, can I pay back the proper tax? So when I'm ready to pay tax, now should I pay with interest? This is one question which comes into any ordinary prudent chartered accountant to examine this particular scenario. Now, how so, why so, I'll come in detail at a later point in time. This is first example where I have paid wrongly with a wrong notion of taxation. Now, second question, levy. I have, say, there is an entity called Mrs. PQ Limited. They received works contract service. Now, what is that works contract service? It is in relation to construction. Now, they have a factory. In the factory, there is a small repair-related activity. Say, repair was done for a sum of rupees 1 lakh. Now, the accountant of this particular entity have paid tax under section 9 subsection 3. How much he has paid? For a moment, let us assume this 1 lakh into 12%. Now, why is that 12%? Why is not 18%? All this we will come little later. For a moment, for an understanding purpose, Now let us understand that this accountant has paid this sum of rupees 12,000 to this particular government. Now, please understand this. When I pay tax, now what will I do? I have to account for the tax. Now, when I do the accounting, one, I'll account as input tax credit. If I feel that no, input tax credit is not permissible, I'll book that as an expense in my books of accounts. Third, paid under protest. Now, as a registered person, when I'm paying the tax to government, as an accountant, when I paid, first thing, I'll say that, look, whenever I paid the tax, I'll account that as input tax credit. Second, I can very well say, no, sir, I'll not account that as an input tax. I'll put into my expense. Now, I'll put this as an expense, like this is in relation to repair and maintenance of immobile property. Because it is a repair and maintenance of immobile property, I'll debit my repair and maintenance for the tax portion. Third element, paid under protest. Now, this is not as per any law. Where there is a dispute. There is a demand from the government authority. Look, you have to pay so much of tax. I, as a registered person, I don't accept the contention of the department officer. But to protect the interest of the company, from what? From interest and penalty. I repeat, to protect the interest of this company from the clutches of interest and penalty. There could be a possibility that the assessee, the registered person, will pay tax to the government and they will write the letter to the concerned jurisdictional officer. Look, you have demanded so much of tax. I presume under the law that this tax is not payable. However, I have paid the tax to you. Under protest. Now, this is what I will do in various scenarios. Now, the moment I say it is input tax credit, this goes to my balance sheet as current asset. The moment I say it is an expense, it goes to my P&L account as expense. The moment I pay under protest, it goes to my balance sheet as current asset. Why? This is recoverable from authority. I have to recover from a government authority. So why should I recover? Look, the government has demanded a tax from me, which is not authoritative under my constitution. Now, here comes your concept of constitution. So what is that? I say whenever there is a tax to be collected, generally the constitution gives me a direction. There is a directive to the states, there is a directive to the union to levy a tax. Now, just give a minute. There is a small technical issue. Okay. Yeah. Hope you are able to hear me. Yeah. Okay. Okay. Now, here I draw your attention to something called Article 265. My Constitution of India says no tax can be recovered, no tax can be collected without authority of law. Now, this is a point of dispute where I, being a registered person, I'll say to the tax officer, my lord, you are recovering a tax, you are demanding a tax where you don't have authority to collect. Now, the moment I say there is no authority to collect, the government, the Supreme Court has given a directive to the government. Look, you have been provided with the authority to recover tax. When you have recovered something which is not with the authority of law, you don't have a right to withhold that particular money. There is one Supreme Court judgment in case of Mafatlal Industries, a classical judgment, right from Central Excise era, till date. This is one case law we have been relying upon in relation to payment of tax or collection of tax by the government authorities without authority of law. Now here, someone will draw the attention of this Article 265 to say, my lord, you have collected this particular tax where Constitution has not given authority for you to recover, right? So when they say this is not constitutional, I'll book in my books of accounts as a money to be recovered from the government of India. Now, please pay attention here. Please pay attention here. Last session, if you recover, we had covered something called payment of taxes. In that, there is one provision under section 49. Under section 49, we have, if you recollect, we say that any tax paid to the government, any tax paid to the government shall be deemed to be a tax where incidence of tax has been passed on to the buyer, right? So there is one provision under section 49, subsection 9, which deals with your payment of taxes. Now, this particular provision says a deeming fiction. The moment you pay tax, it is presumed that burden is passed on to buyer. Now, what provision section 49 says? Now, if you see, dear friends, there is one entry here under protest where I'm taking into my balance sheet. Under balance sheet, I'm showing as a current asset which is recoverable from the governmental authorities. Now, the moment I say it is booked in my balance sheet, the onus, the burden of proof is taken care where I say whatever taxes I have paid, I have not passed on the incidence of tax to my customer. So first and foremost, to say that the tax which was paid erroneously without authority of law. Now here we were talking about the example where my tax is not required to be paid, right? Now this is a case, you being a chartered accountant, you will say, look, you are paid a sum of rupees 12,000. This 12,000, there is no provision in the GST law where the government can recover this amount as tax. The question comes here. Sir, what if I have already paid? Okay. Have you booked as an expense? The moment you are booked as an expense, my section 49 says that you have taken care. The burden of the tax is already passed on to your customer. It is a case where the government will say, you are not burdened with this particular taxation, so I wouldn't give you a refund for that particular amount. So please keep in mind, wherever tax was paid erroneously, it is our duty to bring it back to my balance sheet to prove that the burden of proof was not passed on to my customer. This is another provision. Next. Now, third example. This accountant has remitted 1 lakh instead of 10,000. That's a straightforward case. If you look into my supply details for a tax period, easily someone correlates saying that my value of supply is so much, on that tax is payable so much. Now, if you look into my bank statement, during that period, this is the only money which is being received. So once I can demonstrate to the authority that instead of paying 10,000, I have paid 1 lakh, the excess remittance of tax, I can claim a refund from the authority concerned. Next is your accumulated input tax credit, zero rated supply, inverted duty structure. Now, this is one funda where entire your section 54 read with rule 89 comes into picture. Now, Friends, what I've been doing all along, I've been trying to make you understand which all scenarios this concept called refund we can apply for the purpose of understanding my GST provisions. So first and foremost, my section 54 is a triggering section which gives you authority to a registered person for claiming refund of tax or any other amount paid. Now, first question. Sir, this tax or amount, any other amount paid. Now, can I claim amount paid through electronic cash ledger, or can I claim the refund of amount paid through electronic credit ledger? Question comes. Now, when I pay tax, only this will be refunded or this will be refunded. Question comes, should I claim only that amount which was paid through cash ledger, only that amount which was paid through credit ledger? Attention, I'll draw to your section 49, where this section 49 talks about your electronic liability register. So if you recollect our last session, I have explained your T account. I have explained your T account. In my T account, there is a liability register, there is a liability ledger. Every return which I file, in the return, the outward supply which I mentioned, the debit to that electronic liability ledger, can have a credit entry through electronic cash ledger, electronic credit ledger. That means to say, my payment of tax can be done through credit ledger, can be done through cash ledger. So friends, any tax paid, any amount paid, either through cash ledger or credit ledger, I can claim as a refund. Answer to this, both ledgers, I can claim a refund. Now, next aspect. So what amounts I can pay through cash ledger? I can pay tax, I can pay interest, I can pay penalty, I can pay late fee, right? These are the elements of taxation or any other amounts I pay through my electronic cash ledger. So what do I pay through electronic credit ledger? Only tax, nothing more than that. So interest, penalty, late fee, if at all, if I pay through cash ledger, I can claim a refund. Any tax paid through credit ledger, I can claim a refund. To start with, section 54 says that any person who has paid a tax either through cash ledger or credit ledger can file a refund application to claim the amount of tax as a refund. So to start with, who can file? Any person who paid tax or any other amount. It says any person. Could be a registered person, could be a non-registered person. So can a non-registered person pay tax? Temporary registration number. A person who's not registered, I draw attention to section 25, where the officer concerned can get the person registered under GST law and can recover the tax. So if at all, if I paid a tax, I can claim a refund of that particular tax from the government authorities. Now, though they say any person, we should read that a person who has paid the tax in the position of a taxpayer. A person who has paid the tax to the government in the position of a taxpayer. That person claim a refund. Now, in this, there's one category called UIN. Now, like a special category states registration, where unique identification number is given to various organizations like UNO or embassy or your what do you call that? We call that this nations which are under this consulate or foreign embassies, right? So these are a couple of entities who can claim a refund of notified list of notified taxes paid. This is a special entity which has been incorporated under the clutches of your multilateral entity understanding between United Nations and the nation per se. They will not be a person registered for the purpose of payment of taxes for collection and payment. Rather, as a registered as an entity who is rendering their services in a special authority, by virtue of any of the provisions, if they have paid taxes, they can claim a refund application under Section 54. So this is a separate provision where they call in for payment of taxes. So first and foremost, who can file a refund application? We have understood. What is the time limit? What is the time limit to claim a refund? So my time limit to claim a refund is 2 years from the date of payment. My GST authorities say, my GST provisions say, as a registered person, when I have paid my tax, from the date of payment, within a period of 2 years, the assessee, the registered person, can claim a refund of that particular tax or any other amount which was paid. I repeat, as per the provisions of the GST law, from the date of payment, within a period of 2 years, I can file my refund application. For the purpose of claiming a refund. Now, how do we compute this time limit of 2 years? I'll come with a detailed example at a later point in time. First, one by one, we will understand my provisions and the refund. Then we'll also see what is tested in my examination. This computation of time limit. We can expect one adjustment for 2 marks. How do we calculate? So what do you mean by the computation of time limit? Couple of examples I'll give you to make you understand how this computation of time limit is important or why is this time period relevant for me. Say I have exported goods. In relation to export of goods, is it filing of return or filing of bill of entry, shipping bill, or goods crossed customs frontier? What is that? I have to be specific on. Next aspect. In relation to, say, services. Is it from the date of issuance of tax invoice or from the date of provision of service or filing of return? What should be the point in time I, as a registered person, should consider in terms of filing of my refund application, right? Now, every case where I see that there is a point of refund. Another example, so there is a order passed for payment under protest. This order is in favor of the registered person. Now, when there is a refund application to be filed, is it 2 years from the date of payment under protest or is it 2 years from the date of order? That's how there are various provisions which are governed to calculate this particular concept of time limit. We'll come little later to understand in detail how do we interpret this particular aspect of time limit, right? Now we will move on to the next aspect, what we need to understand from my refund. Friends, couple of aspects for you, not from academical point of view, from your practice point of view. When you talk about this concept of refund, always we need to be strong with 2 aspects called levy and payment of tax. That means to say, first and foremost, is there a right for the authority concerned to levy? When I paid the tax, was that the incidence of tax passed on to my customer? These are the 2 points always you need to keep back of your memory for you to easily understand how do I file my refund application. Am I eligible for filing my refund application? There's one question from Raman. If there is a aggregate turnover exceeding 1 crore, but turnover in Bihar is up to 10 lakhs, whether registration is required in Bihar compulsory? There's one question from Raman where he says, if there is aggregate turnover exceeding 1 crore, but the turnover in Bihar is up to 10 lakhs, whether the registration is required in Bihar, is it compulsory? Now, Raman, I draw your attention to section 22. I draw your attention to section 22. Let me take you through that section 22. It says aggregate turnover. Now, aggregate turnover is, you are saying that greater than 1 crore. Now, the moment the aggregate turnover is 1 crore, any state from where supply of taxable goods or services is undertaken, you have to register under section 22. I repeat, my threshold limit for any state shall be aggregate turnover. When I say aggregate turnover, pan India. Under section 22, there are 4 notified special category states. What are those? Mizoram, Tripura, Manipur, Nagaland. I repeat, these 4 special category states, Mizoram, Tripura, Manipur, Nagaland. These 4 special category states, I have an aggregate turnover of 10 lakhs, rest all India 20 lakhs. Now we already say my aggregate turnover is more than 1 crore. Any state from where I'm making a supply, my point of registration gets triggered the moment aggregate turnover exceeds the specified limit of 20 lakhs in Bihar. Since my aggregate turnover is already exceeding 20 lakhs, I don't look at the specific state turnover of Bihar. Rather, I would mandatorily get registered in the state of Bihar. So to answer your question, Raman, because my aggregate turnover is pan-India basis, it already exceeded 1 crore. In the state of Bihar, when I'm looking into that equation, already I have exceeded 1 crore, I have to mandatorily register in Bihar. I wouldn't look for the turnover in the state of Bihar. So clubbing of these provisions, I have to register in the state of Bihar. Hope I have clarified your point, Raman. Now, coming back to my refund application. In section 54, there is one provision which deals with your claiming a refund of unutilized input tax credit. Claiming a refund of unutilized input tax credit. So what do you mean by this concept called unutilized input tax credit? This means to say tax on inward supply, tax on outward supply. Month 1. For ease of your understanding, I'm putting all CGST, SGST, IGST under one head for ease of reference of this example. Month 1, assuming these amounts is in rupees lakhs. In my month 1, I have 120 lakhs as inward supply. I have 80 lakhs as outward supply. Month 2, I have 50 lakhs as inward supply. I have 40 lakhs as outward supply. Month 3, I have 80 lakhs as my inward supply. I have 65 lakhs as outward supply. Now, if you see month on month, tax paid through credit ledger, cash ledger. Now, in month 1, my input tax 80 lakhs is outward tax and my input tax is 120. Since I have sufficient balance in my credit ledger, I would use credit ledger. Month 2, same scenario. Month 3, same scenario. So my cash outflow is 0. My credit carry forward. So for month 1, I have 120 lakhs minus my output tax paid 80 lakhs. For month 2, my opening balance, I would say 40 lakhs plus for the month, my input tax minus for the month, my output tax, right? Similarly, I'll do for my month 3. What I'll do? My opening balance for the month input tax credit minus for the month output tax. So friends, if you see here, from month 1, I'm carrying forward 40 lakhs to my month 2. From month 2, 50 lakhs is carried forward to month 3. From month 3, I'm carrying forward 65 lakhs to subsequent month. Here, every tax period, you can see that I have an input tax credit which is not utilized. I would say unutilized. Now, what could be the reasons? Why this scenario is happening? Scenario 1, exports or SEZ supplies without payment of taxes. I have exports or SEZ supply without payment of taxes happening every tax period. This could be one reason. Why my input tax is unutilized. I wouldn't say completely utilized. It is unutilized. Now, this unutilized credit I would call accumulated. Look, my month on month, my input tax is getting added. It is getting added to a kitty, which is sitting in my balance sheet. Now, this particular amount is going to sit in my balance sheet as current asset. So this amount, which is sitting in my balance sheet as a current asset, I call that amount as unutilized input tax credit. My section 54 says, you can claim a refund of this unutilized input tax credit, where when you made a zero rated supply. What is my zero rated supply? Supplies to exports or supplies to SEZ unit or SEZ developer. I repeat, exports out of India, SEZ supplies to SEZ unit or SEZ developer. These are the two cases where I see that there is no tax payable on my supply. This is one reason where my purchase credit, my purchase tax is getting accumulated month on month. So this is one scenario where government saying, yes, don't worry, I'll give you a credit of that particular amount as a refund. Why? The taxes what you paid on your procurement was not consumed completely. Now, what is the reason? I have a zero rated supply which cannot be taxed. My supplies to foreign nation is not taxable. For that reason, there is an accumulation of credit which is happening. So government said, yes, you are entitled under section 54 in case of accumulated input tax credit on account of this particular zero rated supply. Second category. We call this is my inverted duty structure. Where law says the credit has been accumulated. How? On account of my rate of tax on inputs being higher than the rate of tax on outward supplies. This particular provision says my rate of tax on input supplies, inputs being higher than the rate of tax on output supply. I'll give you an example. Say there is a assessee who does manufacturing activity, or who does a We will say this gentleman, like there is an assessee who does a manufacturing activity of a motor vehicle. Say there is a chassis which is manufactured by Ashok Leyland. The chassis which is manufactured Ashok Leyland. So this is taxable at the rate of 28%. On this chassis, I, being a job worker, I buy steel and other consumables, which is taxable at the rate of 18% to 28%. I have steel and other consumables which are taxable at the rate of 18 to 28%. I like consumables like paint. Now, what I do, I manufacture a tank on the chassis, which is used for agricultural purpose. I repeat, the tank which I have fitted, which I have manufactured, this is fitted on a chassis which is used for agriculture purpose. Now, friends, this is an example for you to make you to understand. I'm not going with the exact classification. I'm not going with the exact HSN to pinpoint this thing. For you to make understand, I'm giving an example, a simple example. So don't correlate with my HSN classification and then the activity of your supply. Of is it a supply of goods or supply of services? I'm just giving a simple example. Now, assuming for a moment, the tank which is manufactured by me is attracting 12% as a tax. The tank which is manufactured by me, which is used for agriculture purpose, is subjected to tax at the rate of 12%. Now, this is what the government says. Your inputs are being taxed at a higher rate, and your output is taxed at a lower rate. Assuming my purchase, my purchase at the rate of say 12%, 18%, 28%. I'm buying goods, say this is my assessable value tax. My purchase of goods for 12%, say 1,50,000. My purchase at the rate of 18%, say 12,50,000. Purchase at the rate of 28%, say this is another, say 5,50,000. All this put together, I'm having a margin of say 10%. On this, I have a markup of 10%. So my total supply value will be cost plus margin. Cost plus margin. Now, if I look at my sale, in my sale, my assessable value is going to be 1 crore 45 lakh 20,000. I think there is a small figure missing. Yeah, this makes sense, decent, right? 90 lakh 50,000 is my purchase value. On 90 lakh 50,000, I made a margin of 1 lakh 95,000. If I look at my tax paid on purchases, my assessable value into percentage, this is going to be give my input tax. I have paid 3,97,000 on my inward supply. Now, when I look at the tax on outward supply, my outward supply is applicable taxed at the rate of 12%. Why? Because it is used for agricultural purpose. This particular activity, what I am going to supply, government has given the rate of supply is at the rate of 12%. So here, my output tax is 2,57,000, whereas my input tax is 3,97,000. How much is the gap I'm having here? 1,39,600 is my tax paid on inputs higher than tax payable on outward supply, right? In this particular scenario, my per unit 1,39,000 is an accumulation of my tax. How? My inward supply is taxed at a higher rate, my outward supply is taxed at a lower rate. Assuming that I'm a job worker, per month, on an average, I manufacture say 10 units. I manufacture 10 units per month. Imagine my per month accumulation of credit is this much. Per annum, this much. Now, visualize the way working capital is getting accumulated. Every month, 13.96 lakhs is my accumulation of tax credit. In a span of year, 1.67 crores is my working capital accumulation. Now, being a small time SSC, you can see the margin. Per month, his margin itself is around 1,95,000. Now, all 10 units put together, 90 lakhs is your margin. How much is the accumulation happening? Now, if you see the accumulation, my margin into 10 units. So my accumulation on my margin is around 72%. Around 72%. This is a point in place where my government has come forward and said, don't worry. We are going to take care of you. How? We will allow you to claim a refund. Why? Every month your input tax is getting accumulated. Why? My tax paid on inward supply is much higher than the tax payable on outward supply. If I'm paying it 18% on inward supply, my outward supply is only to the extent of 12%. So government said, don't worry, I'm going to take care of you by way of sanctioning a refund. Now, friends, keep in mind, the government, the section 54 says, where my rate of tax on inputs being higher than the output supply. So here it means to say my input service, my capital goods, ITC accumulation is not permissible for refund. Government says when you apply your section 54, only if your input tax credit is accumulated on account of a scenario where the tax paid on your inputs, the rate of tax paid on inputs is higher than the rate of tax on output supply. This is a scenario where I'll grant you a refund under section 54. So friends, please make a note in your working note. To claim a input tax credit, claim of a refund of input tax credit, which is unaccumulated, unutilized. Whenever I have a scenario of unutilized input tax credit, that means to say accumulated input tax credit. Also, I'll say accumulated input tax credit. Under section 54, two scenarios have been notified. First, where my supply is zero rated supply, I haven't paid taxes, you can claim a refund of your accumulated input tax credit. Second is a scenario where my inverted duty structure comes into picture. Because of my inverted duty structure, I can file an application for refund of taxes. So this is my two categories where they are permitted me to claim a refund. Let me see any doubts before we go further. There's one question from Jitin. Jitin says, if export is with payment of tax, is it mandatory to pay output tax through cash ledger? If export is with payment of tax, what rate of tax on exempted goods are to be paid Can he export exempted goods without payment of tax using LUT? Multiple questions are there in this particular question, Jitin. I hold your question. I hold your question. When I start our discussion on section 16, when I start our discussion on section 16, I explain you in detail your point. Multiple aspects are there. And a very practical question, Jitin. Hold up to your question. Definitely, I answer your question. Next, moving on further. My section 54 says, look, I have given you a benefit of claiming a refund when you have exported a zero rate or when you have input tax of inverted duty structure. The government says, look, I'm not going to give you a refund. I'm not going to give you a refund in relation to this unutilized input tax credit. I'm not going to give you a refund in relation to this input tax credit if I avail, who the supplier avails the drawback under customs in respect of central tax or claims refund of integrated tax paid on such supply. Now, government said very clear, look, I'll not give you a benefit of unutilized input tax credit in case where my goods are exported out of India, where you have claimed a duty drawback. This is one. Second, there's one more thing, a case where my exports are subjected to export duty. Now, I draw your attention to this particular area, which is called an exception for section 54, accumulated ITC. Now, what it says, there's a duty drawback. People who doesn't have a knowledge on this duty drawback, I'll give you clarity how it works and what does this duty drawback means. Under customs law, whenever I export goods out of India, my authority, my government of India says, look, I don't want to burden you with the taxes paid in India. You have purchased goods. When you purchase the goods, you would have paid some taxes or some duty. I'll give you an example. I'm a manufacturer in the state of Tamil Nadu. So there is a small place in Tamil Nadu called Karur. Karur is like you would have heard, Karur Vaishya Bank. So there is a small place in Tamil Nadu called Karur. I'm a manufacturer. I import material from Kenya. I do some process activity or I do some manufacturing activity. I export back those goods to the nation called Kenya. So when I'm importing the goods, I have paid customs duty. I have paid some taxes for the purpose of import. I have exported the goods out after my manufacturing activity. Government of India says, look, I will incentivize you. I will give you a relief. How whatever taxes you're paid, I'm going to give you a percentage of duty drawback. My duty drawback is a percentage like 2% to 5% based on your HSN classification. The customs authorities have calculated 2% to 5%. So they say, if at all, you are a person who have claimed the duty drawback in relation to the central tax what you have paid. If at all, if you have claimed a duty drawback in respect of the central tax or IGST paid, then I'll not give you a refund of your input tax credit. Let me club these two things together. I'm a person who have exported the goods. That goods, when I've exported, I filed my shipping bill under duty drawback, and that duty drawback is in relation to my central tax or my integrated tax paid on that particular supply. What does that mean? I'm claiming back my from customs authorities. I'm claiming back from my customs authorities the burden of central tax, the burden of IGST. Government says, look, you are claiming input tax credit. It comes and sits in your balance sheet. It comes and sits in your balance sheet. Now, when you have claimed the input tax credit of CGST or IGST, which is going to your balance sheet as current asset, at the time of export, let me not give you a duty drawback. Or if you're claiming a benefit of duty drawback in relation to that central GST and IGST, again, under GST law, I will not give you a refund of that. So the law says gain benefit only at one place. You take a decision. You want to claim a decision refund under central GST law or GST law, or you want to claim a drawback under customs law. So if you want to claim a drawback under customs law, your benefit under GST law is gone. You cannot get twice benefited out of same supply. So first and foremost, my government authorities say if you are a supplier, if you have claimed a duty drawback of the central tax and IGST paid on that particular supply, I'll not give you a refund. Twice you cannot enjoy the benefit. That is first exception, where I cannot claim a benefit of refund. Second exception. This says if the goods are subjected to export duty. That means to say when the goods are exported, Government of India generally don't charge export duty. What do you mean by export duty? When I import the goods, I pay a duty called import duty. When I'm exporting the goods out of India, when I'm exporting goods out of India, my customs authorities say, don't levy, don't no tax the goods which are going out of India. Don't export your taxes out of the nation. Let the taxes rest with your customs port, my Indian territorial waters. Let that not travel out of India. Exception to that principle. Exception to that principle. For some policy decision, Government of India says that these goods should not be exported in the interest of the public at large. So by any order, if the Government of India has levied a duty called export duty, if you're exporting goods out of India, I levy a export duty. Those goods, I cannot file a refund under Section 54 for the purpose of accumulated input tax credit. I'll give you a simple example. During COVID time, during Corona time, the government of India has put a ban on export of mask, your N95 mask. My government said, our Indian government said, there is a dearth of this mask in India. Let those masks be not exported out of India. For the simple reason, in public attention, this mask should be conserved within the nation. If at all, if someone wants to export, then that be subjected to a duty which is much, much costlier. In fact, there is a ban. Government of India would like to levy that duty to make those goods much, much costlier rather than importing at the other end. The buyer would not show interest in those goods. So as of now, Section 54, please keep in your mind, when I have to file my refund application under Section 54, in relation to accumulated input tax credit, you can claim when you have a zero rated supply, you can claim when there is a inverted duty structure. Now, these two principles, exception to that, if I have exports where the drawback has been already claimed in relation to central GST or IGST, I cannot file my refund application under this particular provision. Second, if the goods which are exported out of India, are subjected to export duty, then I cannot file my refund application under Section 54. This is something which we need to understand. Now, Having understood my refund under section 54, now let us move on. What is required evidence or documents required? Now, this is one area. This is one area where majority of the professional expertise is required. Attention and professional expertise is required. Students, before we start with this particular topic, let us have a break of 10 minutes. The time now is 7:20. Let us reassemble back at 7:30 and let us continue with our discussion. So let us break for a period of 10 minutes. Jay, let us take a break of 10 minutes. Okay. Students, let us start back our discussion. If can you confirm that you're able to see my screen and you're able to hear me? I'll go ahead with my discussion now. Can you confirm that you're able to see my screen? Jay, can you confirm? Meanwhile, there is one point from Mr. Sumit. Export the goods, not the taxes. I do admit with you, Sumit, there are exception to this rule. There are a couple of goods where there is an export duty has been levied. Yes, there is an exception to that rule. Generally, export the goods and not the taxes out of the nation. I do admit that. But in the policy, as per the decision of government, they can frame a policy to overcome this particular thing. Okay. Friends, let us resume back our discussion. Let us resume back with our discussion. Evidence or documents which are required to file my refund application. What are the documents I need to furnish to file to claim a refund of this particular tax? Meanwhile, anyone? Thanks for confirming, Sumit. Yes, we will start. Now, before we get into this documentation, let me make your mind clear. Now, this aspect from your examination point of view, very simple. It goes with the common sense. There is no rocket science. I'll make you clear this logic and the concept so that easily you can go with the flow in your examination when you examine the documentation and the procedural aspects. Right? Now, first and foremost, I have to file an application called RFD01 for the purpose of filing a refund application. I'll put it in this category called export of goods, export of services. Now, I can do exports with payment of tax, with payment of IGST, without payment of IGST. Right? Now, under GST law, just keep in mind, auto filing or automatic refund mechanism is available. This is available in relation to export of goods with payment of IGST. I repeat, there is no separate application to be filed. There is no separate application to be filed. Whenever I export the goods with payment of IGST, there is a deeming fiction. There is a deeming fiction to file deeming fiction for filing of refund application, processing of refund application, getting the money back into my bank account. I'll explain you this mechanism. Then we will go to the other refund applications. Right? In case of export of goods with payment of IGST, GSTR1 file, GSTR3B file with payment of taxes. In GSTR1, I disclose my zero rated supply along with relevant shipping bill number and port code with tax paid. So what I'm saying, my GSTR1, invoice 1, invoice 2, invoice 3, invoice 4, my invoice level details. I repeat, in my GSTR1, I have invoice wise details. I show in a particular table called table 6A. In that particular GSTR1, again, it is not compulsory to remember the table numbers. If you remember the form name, it is good enough. Examination not expected that you should quote section number, form number in that form specific point. No, don't worry. When I file my GSTR1, in GSTR1, I being an exporter, I will show this is an export consignment where this is the IGST I have paid. Now they'll ask, how did you export it? I'll show this is my port code. At this port, Mumbai or Delhi or say Haryana, Uttar Pradesh, your Tamil Nadu, your Karnataka, Kerala, every particular state has been assigned with various points where the goods can be exported out of India. So there are notified ports. Those ports has been assigned with the port code. So when I export the goods, I do mention that these goods have been exported from a particular port. Along with that, the moment I export the goods, I get something called shipping bill. When I import the goods, bill of entry. When I export the goods, shipping bill. This is a technical term. Shipping bill will have a unique number called shipping bill number. So my GSTR1, the moment I say this is my shipping bill number and this is my port code, that GSTR1 is just a information. And GSTR3B, my GSTR3B, let me put this over here so that it's easy for you to understand. Yeah. In GSTR3B, I do mention zero rated supply with payment of tax. So what will happen? My disclosure of information is happening through GSTR1. My payment of tax is happening through GSTR3B. If I mention here in GSTR1, 10 invoices and the IGST is, say, just an example, 32 lakhs. Now in GSTR3B, under this column, I do mention IGST of 32 lakhs. So what is the portal doing? The portal, first step, it compares your GSTR1 with 3B for a particular tax period. Say for the month of March 2020. In March 2020, the moment I file my GSTR1, in GSTR1, I say port code, I say this is my shipping bill number. My GST portal, it cross-checks with the IceGate portal. What is an IceGate portal? Customs Authority. When I export the material, my export details are available in the IceGate portal, maintained by the Customs Authority. So the data validation from GST portal, it flows to my IceGate portal. Both the portals, the one-to-one correlation happens. If this verification, if this validation is successful, then second step, my GSTR1 tax payment is compared with GSTR3B tax payment. If the tax payment is also matching, my application for deemed refund application is filed and I get back my refund within a period of 45 days into my bank account. So how do I know the bank account? When I file for a registration application, as a registered person, I need to mention my bank account details. So along with my registration application, whichever bank account is there, to that particular bank account, the money comes in, gets credited automatically. This is a mechanism for export of goods with payment of IGST. Friends, this is one category. Now, let me put the categories to you so that you can understand, correlate your refund application and the documentation easily. Now, first category, I have explained export with payment of, let me put it here. This is my export of goods with payment of IGST. This is category 1. Category 2, export of service with payment of IGST. Category 3, export of service without payment of IGST. Fourth category, export of goods without payment of IGST. Friends, please look at the language. I am using IGST. Reason, when it is a interstate supply, when it is a zero rated supply, IGST alone comes into picture. Next, supplies to SEZ unit or developer with payment of IGST. Supplies to SEZ unit or developer without payment of IGST. Your deemed supply, your EOU, advanced license, supply under advanced license, etc. Next, exports is done, SEZ is done, inverted duty structure. What else could be there? I have erroneous payment of IGST instead of CGST and SGST, or vice versa. Next, excess payment of tax. Next, refund under order. Order in an appeal. Right? Then you have the United Nations organization, which is a simple provision. So friends, these are the categories. These are the categories which you can think of when we are filing our refund application. When we are filing our refund application. There is a question from Jitin. Jitin says, sir, with payment of tax, ITC will also auto credit to bank. Okay, got your point, Jitin. Now, when I say payment of tax, Jitin, please keep in mind, my section 49 is governing my payment of tax, Jitin. My payment of tax can happen through credit or cash ledger. Jitin, I repeat once again to answer your question. Whenever we say payment of tax, my payment of tax, is it export of supply? Is it a zero rated supply? Is it a SEZ supply? Is it an inverted duty structure? Whatever you say. Whenever we say payment of tax, I have a right to pay through cash ledger or credit ledger. When I pay through my credit ledger, my input tax accumulated, whatever it is, the moment I use my input tax credit, that amount I'm entitled to get as a refund. Now that money comes into your bank account. Please understand that money comes into your bank account, except your erroneous payment. Now, this alone, let me put it clear to you. Whenever there is an erroneous payment, refund into cash or credit ledger as per the source available. Now, continuation to question asked by Jitin. Jitin, please confirm if I have answered your question. In continuation to Jitin's question, sir, if I paid a tax erroneously, now what is that I have paid erroneously? Excess, sorry, this is not erroneous. I'll put this into my excess payment of tax. Sir, if I paid my tax excess, this particular excess payment of tax will come back into the respective source. That means to say, whenever I have paid my tax erroneously, if I paid this tax through cash ledger, government will give the refund into cash ledger. If I paid the tax to credit ledger, government will give the money into my credit ledger. Earlier, I would say around 9 months back, there was an amendment. Prior to that, any excess payment of tax, I used to get it back as a refund into my electronic cash ledger, where I am getting a refund of that. I'll give an example. A smart provision which was analyzed by many of the taxpayers and benefit was exhausted. I have been having a mechanism of accumulated tax. 1 month, instead of paying 10,000, intentionally I have paid 10 lakhs. Why? There was an accumulated input tax credit. I don't file any refund application for accumulated, etc., where there is a lot of documentation. I will simply, instead of paying 10,000, I have paid 10 lakhs. Now, there is a law under section 54. The moment you have paid excess tax, that shall be refunded back to you. Now, when I get a refund, there was no specific direction that it should come back to your electronic credit ledger. The government was paying back to that account, that particular assessee in their bank account. Now, assessees started realizing I have a shortcut route where I'm getting my money easily without any audit mechanism. Government has put an halt on that, saying that, look, wherever you have paid a tax excess, I look into your source. This tax was paid using credit ledger or using your cash ledger. If it is used through credit ledger, I'll refund back that money into electronic credit ledger. This alone you need to understand. Rest all category, money comes into your bank account. I repeat, rest all category, money comes into my bank account. Sir, what will happen if money comes into credit ledger? What will I do, sir? It is sitting in my balance sheet. In balance sheet current asset as a recoverable. Instead of sitting in balance sheet as recoverable, if it comes into my cash or bank account, I can use it for my working capital purpose. That is a funda for me to enrich my credits, which is sitting in my current asset. So coming back, friends, Jitin, hope I have answered your question. No? Further, why goods with payment of tax is not in list. I think you have missed the discussion, Jitin. My export of goods with payment of tax already we had discussed. There is an auto refund application. This we had discussed and we have come into this category now. So Jitin, this is already discussed. Coming back to the list which is there. Now this is a category. This is a category where we need to file a refund application where I need to give a necessary documentation. So what is the documentation required? Now the government says first and foremost, you file your refund application. You file your refund application. There's a notified form called RFD01. Don't worry with your nomenclature. You can say as per the form prescribed. Examination, if you don't remember the form name, you can say file a refund application as per the form notified under the rule. Now, government says in relation to supply, where it is to SEZ zone or SEZ unit, supplier of goods or supplier of services. Government says that a refund application to be filed only by a supplier. So in respect of supplies to SEZ unit or SEZ developer, the refund application shall be filed by the supplier of goods or by the supplier of services. So in relation to SEZ supply, supplier of goods or services, this person is a person who has been notified for the purpose of filing a refund application, right? This is one thing. Next, in case of deemed exports, who is the person? Either recipient of goods or supplier of goods. I repeat, the recipient of the deemed export supplies or the supplier of such deemed export supplies is a person who can file a refund application. Now, what is a notified deemed exports? Section 147 supplies to EOU or supplies an advanced license. Those are the category of list which has been notified as your deemed export. In detail, like when we study that deemed exports, we will have a clarity in relation to that particular category. So we have understood who is the person who can file a refund application. Now, sir, what is the documentation I have to file? First and foremost, for each of this category, when I say exports, exports in relation to goods, in relation to services. Whenever I export goods, there is something called shipping bill and port code. In relation to services, my FARC along with export invoice. Now, in case when the goods are exported without payment of tax, I repeat, when the goods are exported without payment of tax, my details of shipping bill and the port code from where the goods have been exported, that is good enough for me to claim a refund application. In case of services, every invoice with a reference to my bank realization certificate or FARC. Now, please keep in mind, there is a provision in the GST law where they say any goods which are exported out of India, there is a rule called Rule 96, which gives a principle, which gives a provision that as per this Rule 96, there is a specific time limit which is linked with FEMA. As per FEMA provisions, export of services, export of goods, either of these two, export of services, export of goods. As of now, the time limit which is prescribed under FEMA regulations, that is a time limit within which I have to realize money in foreign currency. To showcase that money has been received in foreign currency, to showcase money has been received in foreign currency. FIRC is a document, or BRC, Bank Remittance Challan, Foreign Inward Remittance Challan. Please make a note. BRC, Bank Remittance Challan. FIRC, Foreign Inward Remittance Challan. These are the documents I need to give as a documentary evidence to say these goods have been exported through that particular customs port. These services have been exported. Look, this is my invoice. Against this invoice, this is the money which has been received in my foreign currency. That is good enough for me to say that these are the goods and services. Next, in relation to my SEZ, authorized supplies duly endorsed means there is a no. I'll give you a procedural aspect how it works. People who doesn't have exposure in GST law, I'll give you example how it works. Every SEZ zone, it is a bonded premises. Like when I say bonded premises, it is not a free flow of inflow outflow. Any person who wants to get into that SEZ zone, any person who comes out of SEZ zone, they need to have a prior approval. Without prior approval, movement of in, movement of out does not happen. When the person itself is restricted, the inflow of goods, outflow of goods is also restricted. Services, no one can restrict. When I'm giving a consultancy, when I'm giving a housekeeping, when I'm giving a job portal search, when I'm giving a training activity, now these are all services which doesn't have no control. So they have something. They have notified something called the authorized operations. Authorized operations. I use a term called authorized operation for goods and services. Now, under GST law, the GST officer doesn't know your goods have been received at SEZ, your services have been received within SEZ unit. For that, any registered person who is within the premises of SEZ, I'll give you a very classic example. So there is a company who is into supply of manpower. There is a company who is into activity of supply of manpower. COVID is one classic example for you to understand this particular example. Wipro has got a business unit in the state of, say, Jharkhand. In Jharkhand, there is a SEZ location. Within that SEZ location, Wipro is operating. Now, Wipro says, Praveen, I need 10 people to work on a particular project for this particular software development. Due to COVID, everything is work from home. Now, the team whom I have deployed, Wipro, who is operating in Jharkhand, they need to receive those services. They need to consume those services in that unit, and that service should be rendered to a customer from that SEZ unit. Now, physically, what is happening? I am sitting in Bangalore. My team is sitting in Tamil Nadu, Kerala, Delhi, Uttarakhand, West Bengal, and Madhya Pradesh. Across India, I have my team. My team have been working on remote location. Why? All of them are from different states. Because of COVID, they were asked to go home and work from home. Now, I'm not traveling to Jharkhand. Sitting outside SEZ, I'm working in the brand name of Wipro. Now, the SEZ officer doesn't know, neither the GST officer knows that the services given by Praveen are consumed within the SEZ premises of Jharkhand. Now, this is a scenario where the bill which is given by Praveen, it goes to the SEZ unit. SEZ unit gives that bill, uploads the details of those bills onto their portal. Now, every SEZ unit, they take a prior approval. They say, look, we are into information technology support service. For our unit, we need the services from Praveen. What is that? Legal and consultancy, legal and accounting services. Now, tax advisory services. Now, when SEZ unit has obtained the prior permission from the SEZ officer, at the end of every month, this Wipro uploads on their internal portal, which is given by the customs, that SEZ authority. They in turn validate, yes, this service, what was received from Praveen, there is a prior approval. Prior to starting the business operation from Praveen, they've said that, look, there is a service provider called Praveen. that services are consumed or required for this Wipro unit within the state of Jharkhand. Now, that is a base where the SEZ units get a approval on a monthly basis for the bills provided by a service provider. Sir, in case of services, this is clear. What happens in case of goods? The moment goods get into the premises of SEZ unit, there is a verification. SEZ officer has to authorize. Why should I let the goods inside? So he verifies, he ensures that there is a prior permission. There is a authority. There is a steering committee. SEZ unit, there will be a committee called steering committee. This steering committee gives a authorized goods which can be procured. Now, if there is a permission, prior permission, authorized goods, authorized service supplier. When this is satisfied, he lets the goods inside the SEZ premises. On the back of the bill, there is an endorsement, there is an acknowledgement. That bill is a proof for me to say the goods have been received by the SEZ unit. So this is one thing where my government, the GST authority says, look, I'll give you a refund. You prove that these goods have gone into the SEZ unit. These services have been received by the SEZ unit. This is one other requirement where I have to present. Next, the deemed exports, your supplies to EOU. What they say, the details of invoices or any other evidence where there is a refund required. In case of EOU, similar to a SEZ unit, when I supply the goods to a EOU unit, there is a excise officer, so-called excise officer. There is a customs authority. Now, this EOU, it's now partially with the prior approval of customs authority. Like SEZ, my EOU unit gets a permission from a customs authority saying that, look, these are the services, these are the goods I need to procure for the purpose of my manufacturing activity, which in turn I need to export out of India. So every permission which is given by my customs authority for that supply, the list of supplies, that is a documentary evidence for me to file a refund application. So in relation to EOU, a documentary evidence for list of procurement, pre and post, means they say first you get a list which is approved, and that list be provided for to say that these are the goods or these are the services which are required by this EOU unit under so and so advanced license or under that particular special approval route, which can be consumed without payment of tax or with a concessional payment of tax. My application under deemed export can be filed by the supplier or by the recipient per se. Now, there's one question from Kirtana. Is LUT mandatory for claiming ITC refund on zero rated supply? Give me 10 minutes, Kirtana. I'll come to your question. I'll answer your question. Give me 10 minutes. There's a question from Kirtana where she says, is LUT mandatory for claiming input tax refund on zero rated supply? I'll come to that aspect. Coming back. We have discussed SEZ, we have discussed exports, we have discussed your deemed exports. Next, what is left out? My inverted duty structure. We have discussed one example. Where my purchases is done at 28%, 18%, 12%. My outward supply is at the rate of 12%. Now, this is a case called inverted duty structure. Now, in case of inverted duty structure, they wanted details of all your supplies, which is your inward supply, details of your supply, which is your outward supply. In case of this inverted duty structure, let me buy a space here. In case of inverted duty structure, list of inward supply, list of outward supply. They want your list of inward supply to examine how much tax you paid. They also want your list of outward supply. There's a formula prescribed. My Now, they say, what is a supply which is at a lower rate? What is the total turnover? My supply at a lower rate divided by, my formula is outward supply at a lower rate divided by adjusted turnover. This is multiplied by input tax paid on inputs this is the equation. Now, what is my adjusted turnover? Adjusted turnover is nothing but the turnover of your inverted duty supply plus any other supply made during a tax period. Now, if you have the outward supply taxable at 12%, the outward supply taxable at 18%, they wanted to club all that all that which is called as adjusted turnover. Numerator, my supply which is at a lower rate, this divided by my adjusted turnover. So what is my adjusted turnover? If I am only into supply of that lower rate of goods, that will be numerator. The denominator is your my aggregate turnover during that tax period into my input tax on inputs during that tax period. ITC availed on inputs received during the tax period. Please bear in mind, this excludes input services and capital goods. When I say input tax credit, this input tax credit excludes my services and capital goods. Now, before we go further, let me halt here to explain you something on my integrated tax on goods and services. This Rule 96, which talks about your refund of integrated tax, which is paid on goods or services. Now, when I say my goods or services which are exported out of India, these goods or services should be actually exported out of India. The services should be actually exported out of India. So what will happen if I don't do that? If I don't do that, the government is going to lose the benefit of revenue which is given for this particular it is an incentive which is given for your exports. You claim a refund, the goods are actually not exported. The policy in relation to this particular export, government is not getting any foreign proceeds. The economy is not going to grow where there is a siphoning of taxation or funds by way of a refund application. Similarly, is your exports. When I don't actually export the service, when I say it is an actual export, and when I file a refund application, unduly you get a benefit of the tax loss. Government felt, let me not give this particular undue benefit to you. Rather, the export of goods or services should be under a bond or LUT. There's a Rule 96 which talks about your exports with payment of tax. Similar to this, there is one more rule called Rule 96A. This particular Rule 96A, again, please keep in mind, it is not compulsory in your examination to quote the rule or a section. You need to understand the relevant provisions. This provision, 96A says, I can do the export of goods or export of services under a bond or under a LUT. Now, why is this particular bond or LUT? The background for this, particular export, they say, any registered person who want to supply the goods or who want to supply the services without payment of tax, now the government is not going to get a tax. You have to do that where you have given a letter of undertaking or you have executed a bond. This is one principle which is there under central excise law, which was not there under service tax law. This is a mechanism where The concerned assessee gives a declaration, gives an undertaking to whom? To the jurisdictional officer, where he says, look, I'm a supplier. I being a supplier, I promise to you that I'll pay the tax along with interest. I promise to you that I'll pay tax along with interest, if I don't export the goods within a period of 3 months, from the day when I prepared my tax invoice, which is meant for export. Or in case of services, within a period of 1 year, where when I said it is an export of service, the payment for that particular service, I haven't received money in convertible foreign exchange. I repeat, government has given you a benefit. Now, one of our friend, Sumit, I believe, Sumit raised one point saying that export of goods can happen, but not the taxes. Now, government say, look, you can export the goods without payment of tax. What if you prepared an invoice, you enjoyed the benefit of non-payment of tax, but you have not actually exported the goods. The goods didn't went out of India. Then government say, look, I'm not going to monitor you each and everything. You come forward and give me a simple declaration. Under VAT law, under service tax law, this concept is not there. Under central excise, we had this concept of letter of undertaking or bond, which was carried into our GST law, wherein the ownership was casted on the registered person to say within a period of 3 months. Like they are given a question of 15 days from the date of preparation of invoice. Say I have prepared an invoice on in relation to goods. I've prepared invoice on 10th August 20. I have been given with a time limit of 3 months. So let me take 90 days, 3 months. It's an absolute month. So till 9th August, September, October 20. August to September, August, September, October. On or before 9th October, my goods should have been exported. This particular rule says, look, I'll give you 15 days after the expiry of 3 months, within which you have to prove that the goods have been actually exported out of India. I repeat, I'll give you 3 months. Additionally, 15 days after the expiry of 3 months, you have to prove me a documentary evidence within the documentary evidence that the goods have been exported out of India, right? So here, my date actually permitted under this rule is from this date, 15 days. On or before 24th October, you come forward and show me your shipping bill that the goods have been exported. Sir, if the goods have not been exported, what can I do? You can take a special permission from commissioner for extending such period. So why is that required? There could be a case. I'll give you an example of your food industry. Say there is a consignment which is packed, which is meant for export. If there is a suspicion that there is a food adulteration, if there is a complaint that this particular food products are substandard quality, or if the recipient in the other nation makes a complaint that this particular supplier has been dumping the goods which are of unfit quality, whatever be the reason, once I've kept the goods ready, I've prepared the invoice. Now, I being an exporter, I need to work on that. I need to see that these goods are good enough. I need to get the text check or clearances. There are various permissions, especially the food industry. I have to get the permissions from the food inspector, from the FSSA, from the customs authorities. I have to prove various things and then do the export. In the process, if something goes wrong, where my consignment was held, like Corona is one classic example. I prepared my export invoice on 20th March 2020. March, April, May, my consignments are stuck because non-availability of transporter, because non-availability of inspection, because non-availability of appraiser. Various reasons, I couldn't export within a period of 3 months. Then I'll make an application to commissioner. Please extend this date beyond that particular period, where I failed to export the goods within a prescribed period of 3 months from the date of my invoice. So, friends, in relation to my exports, the government says, I'll give you a time limit for exporting within a period of 3 months from the date of invoice. Additionally, they have given a question of 15 days. 15 days after the expiry of 3 months. 15 days after the expiry of 3 months. That is a period within which I have to export. I have to prove that the goods have been actually exported out of India. Second, in relation to services, I being an exporter of service within a period of 1 year. Now, under current FEMA regulations, 9 months is the time within which my foreign proceeds have to be released. But government said, I'll give you 1 year, or such other period which is extended by commissioner. In case if I take a special approval from RBI, that extended period as RBI shall be governed for the purpose of these exports. Now, supplies to Nepal and Bhutan. In Nepal and Bhutan, rupee is the currency which is there. In case of supplies to Nepal and Bhutan, if I don't receive in convertible foreign currency, still it should be considered as supply of services for export where money has been received in not in a convertible foreign currency, rather it has come in my INR. This is what they say. So to answer your question, let me see, Kirtana, my GST law says that in relation to your exports, there should be a LUT or bond which is compulsory prior to making a zero rated supply. Let me see if there are further doubts. Yeah. Ketan, I hope I have answered your question. Now, with respect to this LUT, every zero rated supply, unless I have a LUT or bond, but I'm not technically supposed to make a zero rate supply. There is a board circular which is issued during October 2017, where the government authorities say LUT or bond is a procedural aspect. It's a procedural aspect. You can very well export the goods, you can very well export the services, and obtain your LUT or bond at a later point in time. So the answer to your question, Kirtana, yes, LUT is mandatory. LUT is mandatory to make a zero rated supply. Now, is it compulsory to claim ITC? Answer that I wouldn't say for ITC alone, LUT is required. To first and foremost, to export the goods or to export the services, I need to have a LUT or I need to have a bond. The same concept is applicable for my SEZ supplies also. Next is your one question which is come from Ambika. Is SEZ mandatory to provide evidence to supplier? What if SEZ does not? This is one hanging dispute which is going to come in the short future, Ambika. I don't know whether you have a good exposure in indirect taxation. I believe you have. That's the reason this question has come. For the benefit of other students, I'll brief this particular question, which is a valid question, which is going to create much havoc in the complaints under the GST law. Students, again, if you don't understand, don't worry. I'm making it so simple that even if you don't have experience in your articleship, you can just understand the provisions, how it is going to work. Experts who have 3 years of experience in the indirect taxation, you get much perfection in your concepts. The question from Ambika is, sir, is it compulsory for me as a supplier, as a service provider, to obtain that approval from SEZ unit? In relation to filing of refund application, Ambika, the provision, the rule is saying that yes, for claiming a benefit of your SEZ supply, it is compulsory. It is compulsory. What is compulsory? Approval for authorized operations. Approval for authorized operations. The reason, when I talk about L&T, let me take example of L&T. Let me take example of Wipro. Wipro has a unit outside SEZ. Wipro also has a unit within SEZ. So most of these big software companies, they have domestic units. They also have a SEZ unit. When we give our services, when we render our services, how does the GST officer know that the service provided by you was actually consumed within a SEZ unit for authorized operations? The only way they can make it out is when there is a approval given by the SEZ officer. The SEZ officer says that yes, this goods or this services were received within the SEZ premises. That is the indication, that is the mechanism where the GST officer can blindly process the refund application. So it's a procedural thing, but it is a compulsion. Yes, it is required. So answer for your question, Ambika, it is required. There is no excuse on that. Hope Kirtana have answered your question, and Ambika, your question is also answered. Next. We have understood the documentation required for SEZ, EOU, exports. Now we will go on to the next limb of documentation. Inward duty structure also we have understood. Now, in case of our appeal, like as I say, payment under protest. When I pay tax under protest, students who are listening to me, please keep in mind, under GST law, under indirect taxation law, wherever there is a dispute, wherever there is no clarity, I would recommend pay the tax if there is an element of doubt under protest. The moment I pay the tax under protest, there is no time limit for filing my refund application. If you recollect the beginning of my session, I've said that within a period of 2 years, from the date of payment of tax, I have to file my refund application. Now, when you think of the judicial system in India, where I pay the tax under protest, I expect a show cause notice. That show cause notice needs to be converted as an order. I go for an appeal. The appeal is rejected. I go for tribunal. Tribunal, I get a favorable decision. The department goes to High Court. High Court, I may get a favorable order. The department goes to Supreme Court. Now imagine the layers, adjudication, from adjudication, appeal to tribunal to High Court to Supreme Court. This itself may take 20 years odd. Now, the good thing is, whenever I pay tax under protest, all this period is excluded from the calculation of 2 years. Law says, whenever you have a dispute, whenever there is an appeal, the day when you get the order passed, from that day, within a period of 2 years, you produce the copy of that assessment order and file your refund application to get the amount refunded. Next. In case of intrastate supply, by mistake I have paid as interstate supply. There is a transaction, I should have paid taxes intrastate, but by mistake of law, I have paid that as an interstate supply. So they say, you give me a statement, what transactions you have considered that particular intrastate as state supply. I draw attention of you to here, reference to section 77 of CGST Act. Now, again, friends, don't remember the sections. If you're punter, if you're very good in indirect taxation, go with the sections. Examination not compulsory. I'm giving these references for your academical interest. At a later point in time, when you get into practice, this you can use. Client comes back to you and says, sir, I did a mistake. Client comes back to you and say, sir, I did a mistake. Or it may also so happen. Chartered accountant itself go back to the client and say, I did a mistake in interpretation. That particular mistake, what happened? Remittance of tax as intrastate supply instead of interstate supply, or vice versa. Now, what is that happening? I'm paying tax under IGST. Instead, I should pay under CGST, SGST, or pay tax under CGST, SGST, but I should have paid under IGST. Now, this is a case where my section 77 comes into a rescue. Why? You as a taxpayer, you have paid tax. But under wrong place of supply or wrong interpreted. Now, this is a case where the provision says within a period of 2 years from the date of payment, the provision says file a refund application and pay the proper tax. The best part of this section is no interest to be paid. I repeat, this section 77 says, by mistake of law, you have presumed that a supply to be an intrastate supply, which has been held to be an interstate supply, or an interstate supply has been held to be an intrastate supply. Don't worry. You file a refund application and pay the proper tax to the authority concerned. No interest to be paid. This is what my section 77 says. I draw attention there's one fantastic judgment in the case of Mr. Saji in the state of Kerala. A very fantastic provision which has been analyzed by this Kerala High Court. Couple of judgments from Kerala High Court, like Gujarat High Court, Kerala High Court, they have a very, very different view in terms of analyzing extremes, but they have very qualitative judgments. I'm not saying that rest all are not good. They outperform most of the cases the way they interpret the law. Now, this case, they say, look, this Mr. Saji, he's a gentleman who paid a tax called IGST. Sorry, he has paid a tax called CGST, SGST, Kerala. The officer, the state GST officer said, no, this is a transaction called interstate supply. You're not supposed to pay SGST, CGST. You're supposed to pay IGST. So he said, I'm going to detain your goods along with your consignment vehicle. There is a consignment, there's a vehicle. Along with the goods, the vehicle has been detained, saying that you pay a proper tax called IGST and claim and get your consignment released. This gentleman went to and knocked the door of High Court and said, look, I admit that I did a mistake. I am ready to pay the tax. To whom I have to pay the tax? So and so jurisdictional officer. Now, I can file a refund application from that jurisdictional officer. Now, what this gentleman plead, officer has to collect tax from me. Officer has to give a refund of tax to me. Why shouldn't the officer appropriate the tax I have to pay, the tax he has to collect, and pass an order that the tax is already paid? This is one particular case which comes for your rescue. The only catch you should keep in mind is 2 years. You need to make a request to the jurisdictional authority by virtue of a refund application, where requesting the officer concerned, look, under section 77, the section itself says I can claim a refund and I have to pay the tax. So when I claim a refund, you are the jurisdictional authority who is going to give me a refund. And when I have to pay the tax, you are the jurisdictional authority who is going to collect tax. Please appropriate both. And section 77 clearly says that no interest is to be paid. Because no interest, there is no loss of revenue. Kindly give me a relief in this regard. So this is one fantastic provision. Please keep in mind, may not be from examination point of view, from your career point of view. Next. What is the documentary evidence in relation to my excess payment of tax? The provision says, give the relied upon documents, workings, and along with the returns. They say, you give me the relied upon documents, means In that particular month, what is the supplies you have made? In that particular month, what is the inputs you have taken? What is the tax you ought to pay? What is the tax you have paid? If you can showcase that the tax paid higher than the tax what you have to pay, that excess I'll refund back to your account into the respective account. Next, odd and apple we have discussed at length. So these are the cases where I can file a refund application for the purpose of claiming a refund. Now, these are all category. In addition, all these are the cases where we talked in relation to payment of tax alone. So what if other payments? What if other payments? Interest, penalty, late fee. Now, government says late fee is something generally there is no scope or there is no possibility to get that as a refund. But however, interest and penalty, if at all, if I paid this any other amounts, interest or penalty, I can file a refund application to claim a refund of that particular amount. This is one mechanism where I can get a refund of any other payments where by virtue of an order or by virtue of excess payment, I made that deposit, I can claim a refund of that particular amount. Next, time limit. Law says within a period of 60 days from the date of application, process the refund application for issuing order. Now, there are various rules. There is a mechanism. I'll come to that one by one. My rule 89 talks about your documents, then your forms, then computation of eligible amount as refund. Now, inverted duty structure, I have explained you how does the equation works. So as of now, keep in mind that this rule 89 talks about how your refund application will be filed, what documentary evidences I need to provide in relation to that particular application. There is a concept under section 54 called provisional refund. Now, this section 54 says that in relation to zero rated supply, only zero rated supply, make a issue a order for 90% of provisional refund. Now, law says, look, I'll give you a time limit. Within 60 days, you do your work. But the moment an assessee files an application in relation to a zero rated supply, 90% of that amount you can provisionally give as a refund. Why? Zero rated supply, they see that this is a less risky or less exposure to any sort of fraudulent activity. So for those particular things, they say you can very well grant a refund under this particular rule or under this particular section up to 90%. Now that is what they say. Next. When I file a refund application, order has to be passed. Now order can be passed in favor or rejection. Now, when an order is passed in favor, nothing to worry. The money, whatever I have claimed, that comes back to me as a refund. So here they say, if the proper officer is satisfied, like the person to whom I have filed an application, the proper officer is satisfied, he will process my refund application and he'll issue a form called RFD 06. There's a form called RFD 06. This form, they will say, look, so and so amount has been sanctioned for you to claim a refund. You're entitled for so much of amount, and I am giving you so much of amount as a refund which you're entitled to him under provisional basis. Now, while issuing a refund, there is a possibility called adjustment of outstanding demand. Now, this is a adjustment for existing demand. Now, any demand is there from that particular person under any of excise, VAT, or service tax law. The provision says you are giving a refund to him. There's a tax due which is to be collected. You do the appropriation of existing demand. After that appropriation, release the balance amount. Now, that appropriation, already there is an order and the order is confirmed if the appeal was not filed. I'll give you an example. Sir, I'm registered under VAT laws. Under VAT law, every month when I make a sale, I'm supposed to collect something called C form. During a particular period, I have not collected C forms. The tax on account of C forms along with interest came up to a sum of rupees 12 lakhs. This particular assessment was done under VAT law. I have been served with a refund under state GST law. The concerned state officer will say, look, I have to give you a refund of 25 lakhs. There's this outstanding demand of 12 lakhs under VAT law. That demand, you're not going to file an appeal. You have admitted that this amount is to be payable. Why shouldn't I appropriate that outstanding demand and pay you the balance 13 lakhs? This is a mechanism which is going to happen when there is an offsetting of existing demand. Next. This I'll give you by issuing a adjustment, like I'll give you an intimation. Unless the intimation is given to the assessee, nothing can be appropriated. Everything happens with the knowledge of the assessee. If the officer concerned is not inclined to give a refund, what he will do? He will give back your, he will reject back your application. Now, when he is rejecting back your application, whatever input tax which was paid, I'll come to your rejection here. There is a rejection for one accumulated input tax credit. Second, payment of tax to SZ supply. Now, whenever I file a refund application, RFD01, whenever I file a refund application, please understand the concept. Input tax credit which has been accumulated. First question, where is your input tax credit? So this input tax credit is there in my balance sheet. As what? As current asset, right? Now, that item which is there in your balance sheet, is it there in your electronic credit ledger on the GST common portal? Now, you have accounted in your books of accounts that this is the purchases. This is a credit which I have to claim from the government. Good. Now, equivalent amount, is it there on your GST common portal? Question mark. Where? Electronic credit ledger. Now, what happens when I file a refund application? Amount of refund sought shall get debited from electronic credit ledger. Now, please understand this concept. I have my money in electronic credit ledger. Now, how does the government get that money? The moment I file a refund application, government says, look, you are saying that 20 lakhs is there in your credit ledger. As per your application, you are saying that I am eligible for 12 lakhs as a refund. Why not entire 20 lakhs? Some reasons. I have money for some formula based on which instead of 20 lakhs, I am eligible only for 12 lakhs. Now, when I have claimed that 12 lakhs, government, what they will do? They will take that 12 lakhs from your credit ledger. It goes to a liability ledger. It goes to set off as with the government authorities. They examine your application. If you are entitled for that 12 lakhs, that money of 12 lakhs comes into your bank account, right? So the moment I pay, that money goes out of my electronic credit ledger. So what is happening here? The moment that 12 lakhs is processed, that comes and sits in my bank account. In your balance sheet current asset, under recoverable from government. From 20 lakhs, I pass a receipt entry into bank account. Debit my bank account, credit my input tax credit account. So my GL 20 lakhs gets reduced to 8 lakhs, and that 12 lakhs goes and sits in my bank account. This is what happens in case of my accumulated input tax credit. Rule 92 says, in case of rejection, the money which you are entitled, the government has rejected your application, that particular money will amount shall be recredited back to electronic credit ledger. Right? What happened? My money was picked out of credit ledger. That money will come and sit in my electronic credit ledger when there is a rejection. Examination. This is one area you can be tested for 4 marks as a case law. Please keep in mind, please pay attention. The examination is trying to test your concepts. It is going to test your understanding of the law. This is purely on the basis of your concepts, nothing rocket science in this. Now, when I filed a refund application, my money which is in the credit ledger was picked up for scrutiny. Rejection, it comes and sits in my electronic credit ledger. So what if there is a payment of tax to SEZ supply? I filed a refund application. Now, this is a second category. Rejection for accumulated input tax credit. Rejection for payment of tax to SEZ supply. Right? Or I can say export of service. Whatever, zero rated supply. In case if there is a rejection, no recredit back to electronic credit ledger. This is the point which is going to be tested in your examination. Now, why is it so? The law is very clear that only in case of your refund application on account of accumulated input tax credit, to the extent the application has been rejected, because while filing your refund application, your money from the credit ledger has been picked up, I give back the same to your electronic credit ledger. In relation to SEZ supply, in relation to your exports, you file an application, but you fail to give a relevant evidence. You fail to satisfy, convince the officer concerned that this is an export with payment of tax. This is a SEZ supply for authorized operations. Because you fail to satisfy, the officer will reject your application. So what will happen to my payment of tax? I draw your attention to Rule 96A, where we were discussing. One of your friend called Ketana asked LUT or bond. I draw attention to that provision where I have given a declaration. I have given an undertaking to the government, to the jurisdictional commissioner. I ensure that the goods will be exported. I ensure that the services will be exported. Money will be received in convertible foreign currency. I have promised that the goods are exported, supplied for SEZ operations. Services are supplied for SEZ operations. One of the question came from Ambika. Your friend called Ambika. So what if SEZ unit fails to give me a authorization, fails to give me a relevant evidence? That is the point in time where your money gets blocked. So why is that happens? Now, there are multiple reasons. Not every goods are meant for authorized operations. When I say authorized operations, I'll give you an example of input tax credit under GST law. When I receive goods or when I receive services, the goods or services are meant for business other than business. I repeat, when I receive goods or services, these goods or services are meant for my business, are not meant for my business. So to this portion which is not meant for my business, I cannot take my input tax credit. Similarly, the goods and services which are given to SEZ unit or SEZ developer, which is not meant for SEZ authorized operations, I cannot get my refund. A classic example for that is your R&D done undertaken in a SEZ unit. Assuming that there is a test run, there is a R&D undertaken in a SEZ unit which is not approved by the what you can call the steering committee. Now, generally, the SEZ steering committee, they are the most sought out people. Reason they have been they know in and out of the business. It is very tough. It is very tough to convince and get the list of authorization from this steering committee. Reason they are people from MTech background. They are people from your agriculture background. They are people from your engineering background. There are people from your what you call economics background. These are the people collectively see what is your business, collectively ascertain what you need to say. This is required for my SEZ operations. The goods which are not meant for authorized, you never get a approval. Once you don't get an approval, the question asked by Ambika, I stand up with the officer saying that, officer, I didn't have a proof. Then straight away they will reject my application. The moment they reject your application, the tax what you have paid, will not be recredited back into electronic credit ledger. Examination, a 4 marks case law can be expected. When there is a rejection, how do you deal with the amount which gets recredited, which does not get recredited? So if at all, if they want to test this question, they will say, Mr. X, an accountant of a private limited company, has filed a refund application under Rule 89 of CGST rules, wherein he has been rejected with his application for supply of goods to SEZ unit. Examine the relevant provisions with respect to the payment of tax and its recredit back. Or the accountant says, I'm entitled for getting the refund of that money either into my bank account or into my electronic credit ledger account. Examine the GST provisions. Is the contention of the assessee right? Is the contention of the accountant, is it correct? This is what is going to be tested as a practical question in your examination. There are various forms, RFD 08, RFD 09, RFD 06. I would say these are all procedural forms. Not worry much about the procedural forms. The moment I file refund application, I have a form for acknowledgement. The moment there is a provisional order passed, again there is a form. When there is a deficiency memo, there is again a form. Post deficiency memo, when there is a rejection, there is a notice given. Again, there is a particular form. Once I reply to the notice, I being an assessee have to file a particular form. Based on the reply, the assessing authority will pass an order, which is called RFD 06. I call this as notice 7. This is notice in 8. This is a reply in 9. And this is the order in 7. But see, don't remember the chronology, don't remember the form numbers. I would recommend if you start remembering the form numbers, you will land up nowhere. So just understand, I file a refund application. The moment the application is received, Tapal, the acknowledgement, the department is going to give me an acknowledgement. Once my application is filed and accepted, officer may process my application on a provisional basis. Once that application is processed on a provisional basis, the officer will decide whether to issue a deficiency memo or to pass a rejection order. So what do you mean by deficiency memo? Deficiency memo is a mechanism where some documentary evidence not provided. The officer, the proper officer who processes your application, he says, look, you have filed your application. There are 1, 2, 3, 4, 5 forms, 5 annexures you have to give along with your refund application. What is that? RFD 01, Annexure 3, Statement 3, Then your GSTR 2A, ITC reconciliation, and undertaking. There are various forms, Rule 89. Students who have exposure in your internship, articleship, who have filed a refund application, you will have a better understanding. Students who doesn't have an experience or exposure in this particular thing, it's a procedural thing, nothing much. There is a checklist 1, 2, 3, 4, 5. As a chartered accountant, when I have to guide my SSC, I'll say step 1, do this, step 2, do this, step 3, do this. I'm going to give a stepwise guidance for SSC. Similarly, along with my application, there are 4 to 5 set of documents I have to give. If any one of the document is incomplete, is not provided, or is incorrect, I repeat, if it is not provided, provided but incomplete, provided but incorrect, these three particular things will be communicated back to the SSC saying that there is a deficiency. The moment there is a deficiency, the process is first the officer communicates to me, to the registered applicant, that there is a deficiency. The registered person has to rectify the deficiency and file a fresh application. Then proper officer, I would say PO, has to either pass the order or issue a notice. Now, what do you mean by this? Once a deficiency memo is given, my application is deemed to be null and void. That means to say, the officer is saying, look, you have come with an application. Your application is incomplete. Like your, elections. Whenever there is an elections, there will be a nominations to be filed. For various wards, panchayat elections, municipal elections, the candidates who wanted to stand in that, they come with a nomination form. That particular nomination form, if there is any deficiency, the officer, the in charge concerned, they reject the application. Your application is not counted that it is applied. You have to make a fresh application. Similarly, under GST law, once the deficiency memo is given, my application gets cancelled or nullified. It is as good as not filed. So again, I have to make a fresh application to the officer concerned. So when I make a fresh application, the officer cannot, I repeat, he cannot issue another deficiency memo. Reason, law is very clear. You can issue a deficiency memo only for those items which is missing. The moment the assessee has come back with the proper items which is missing, you cannot give a fresh deficiency memo for a new thing. You said 4 annexures, like along with the application, say 4 documents to be uploaded. Once you give a deficiency memo, assuming assessee has come back with 4 applications, you don't have a right to issue once again a deficiency memo. So it's a one-time opportunity for the officer. Once the application is refiled, 4 documents are there, you either pass an order for what? Granting the refund, or issue a show cause notice. Why? I believe that you're not entitled. Before I pass an order for rejection, I'll give you an opportunity of being heard. That is how this notice works. The moment a notice is given, it is deemed that officer concerned has an apprehension that you are not entitled for refund. The moment there is an apprehension that you're not entitled for refund, I will be given an opportunity of being heard. Why? Principles of natural justice. I have to get back to the officer with my justifications. The proper officer concerned, he will put his objections. I'll try to counter for those objections. The reply will be in a particular form prescribed. So examination, when you're writing this, you can always say, when a deficiency memo has been served, the assessee can make a fresh application rectifying the deficiency memo. Based on the application file, the proper officer either has to issue a notice for calling for reason to why not to reject, or issue an order under a relevant form notified. You can use a language called under a form notified. Now please keep in mind, this looks like theoretical, but when you understand the logic in it, you need not read again for your examination the same whole lot of theory. Understand the concept in a practical way. So once they have given a notice, opportunity of being heard, I respond, there is a personal hearing, then they finally pass an order. This order either for rejection or passing a favorable order. This is all what we need to understand in relation to application to be filed, provisional refund, and a final refund. Also, we have understood when a credit will be coming back to my credit ledger, when it will not come back to my credit ledger. Clear? Next. Let me see if there are any dots till now what we have covered. Now, there is one question here. Jitin says, how long it takes normally to get a reply for RFD01? Jitin, as per the law, within a period of 60 days, 60, the order under GST law has to be passed. If the officer has not passed an order, like generally, see, the moment this how the refund mechanism works. Within 3 days of filing my application, I get an acknowledgement from the officer concerned that look, you have filed so and so application, your application has been accepted. Within a period of 15 days, 15, I have to receive a provisional refund or a deficiency memo. If the officer has not issued a deficiency memo within a period of 15 days, it is deemed that you are entitled for refund. Everything is automated. Thanks to couple of provisions where everything is under your electronic mode of operation. Manually, you need not go get the application reviewed, get the documents examined. Everything is online. Now, when someone is rejecting your application, now it is not so simple to reject. You have to justify why you are rejecting your application. We have, when we study our basic principles of accounting, there is one principle called verifiable and objective evidence principle. I repeat, when we read the basic principles of accounting, verifiable objective evidence principle. Now, the way we say every accounting transaction we record, there should be a supporting evidence which is verifiable and objective in nature. The same way, when I file my refund application, when the documents are in line as per the law, there is no way officer can reject my application. Even if the officer is rejecting the application, the concerned appellate authority is going to examine the genuineness of that rejection and is going to take up the case for further. So technically, 15 days. If your application is not rejected, then it is deemed that it is accepted, and within a period of 60 days, you will get back your refund. So friends, this is a procedural aspects where I file an application, I give supporting documents, then I get a refund from the department with various stages involved. Now we move on to further to this concept called relevant date. Now this concept of relevant date is something which is explained in your section 54. It says in case of goods exported out of India, where a refund of tax paid is available in respect of goods, the input or input services, my date of refund, my eligible date of refund will be by if the goods are exported by sea or air, the date on which the ship or aircraft is loaded with such goods and which is leaving India. Where the goods are exported by a mode of sea or air, where the ship or the aircraft which has been loaded, the day when the ship or aircraft leaves India, from there I have to file a refund application within a period of 2 years. Sir, how do I know? How do I know that the ship or the aircraft has left India? There is something called EGM, Export General Manifest. This is a document which speaks on its own. When was the is it through a sea? Is it through air? And when the goods actually went out of India? So what if it is by road? If the goods are exported by land, then when the goods cross the frontier, Indian border, that is a point in time where I have to calculate my time limit of 2 years. My time limit of 2 years. So in case of deemed exports, date on which return is filed in relation to such deemed exports. So when I file my GSTR 1, GSTR 3B, where I disclose that this is a material which is meant for deemed exports, that is the time limit from where my 2 years is get calculated. In case of services, which is exported out of India, where I have to file a refund application, which is in relation to services, there are multiple scenarios where issuance of a tax invoice, the provision of service. This is how I calculate for each category, the section 54 say for each category, when you are filing your refund application, please examine the date when you are going to file your refund application. In case of your section 77, where I have paid IGST instead of SGST, CGST or vice versa. This is a case where government says that 2 years from the date of payment. Now, please keep in mind, when I say date of payment, it is not the challan date. Means the day when I deposit money into electronic cash ledger. Rather, it is the date of filing your return. Whenever we say payment of tax, mere depositing of money into your cash ledger doesn't mean it is a payment of tax. The day when you file your return, see, when I file my return, my tax or outward tax, this gets debited into my electronic liability ledger. That liability ledger gets credited by cash ledger or credit ledger. How does it happen? When I offset my liability, when I file my GSTR 3B, there's a button called offset liabilities. That means the money from credit ledger, the money from cash ledger is picked up to pay that particular tax concern, right? So this is with all together we need to understand with respect to my payment of tax. So friends, all together for us to understand with respect to what is a refund under GST law, read with my constitutional authority under Article 265 of the Constitution, where the provision is explained, which all cases I can file my refund application, how that mechanism works for me to claim that money from the government, what is a prescribed form, what are the documents which I have to upload along with my refund application, and the process of this refund application, what all aspects I have to ensure, to get my refund within a timely manner. So with this, I come to end of my today's discussion. Let me see if there are any doubts further. No. Okay. So with this, we come to the end of today's discussion. We meet again back on 4th. We will discuss on the concept called export and import under GST law. Till then, good night and goodbye.